Let's talk about this. It's Wednesday, May 25th. We had a decent list this morning. Gap downs, gap ups, and the one that I really liked is that HPE from this morning for a few reasons. One of them is we're coming from many days up. So this is the fifth day. Really nice, impressive move in the last few days from this support, and we moved higher every day in the last few days. And today we're gapping to 1830, and I keep it on the list here. You notice it's at the bottom. Everything that was down here was a fade candidate. We wanted to fade the gap means going in the opposite direction of the gap. We're gapping higher. I want to short this and fade the gap, what they call. So this is the bias, and I set a bias for every stock here. This is whatever is here, obviously, is going to be played short. Whatever is here, I'm going to look to buy at some point of the day. And the bottom ones here are the fade ideas, and this is gapping into resistance, and it's a bigger gap. Imagine if you had this at 16 bucks, and this morning it's opening at it opens at 18.30. So you want to sell some, you want to take some profits. If you were smart enough to buy down here, you will be smart enough to take profits here, and you're very happy doing so. By doing so, by taking profits, you also pushing the price lower, and that's when we come in. So what I saw here, so my bias coming from few days up, and it's a bigger gap, and it's into resistance. We've been to the 1850 number in the past, and from that number we just kept going lower. So when that happens, when I have those three, this makes it a perfect candidate for a fade. And I wouldn't mind fading or taking the position just at the 1 minute. This is a 1 minute chart, and I start the day with a one minute chart. I wouldn't mind taking a position at the 1 minute chart. It has a bigger stop. In this case, it was 1825, let's say, by 1850. So we're talking about 25-cent stop. And one more reason, I wasn't fast enough. I wasn't at the right place, right time when this happened. It just happened in a split of a second. But I did have the time to watch it coming back. When this happens, when the red comes in, there's one thing I don't do, and that's jump in. I used to when I was a novice trader. When this happens, when we break the low, and then followed by another red, I'm not jumping in. I'm waiting for it to come back, and that's exactly what it did. Sometimes it will not do it. Sometimes it will just keep going and going. But when that happens, that's for me, that's gold. So counting the candles and waiting for them to form. I'm not taking any position before the candle is forming. In this case was the 1 minute. So I measured this candle, and it was 1834 as the low, and the stop, you can cheat the stop. You can put it at 1844, and that would be perfect, only 10-cent stop. I love that. The only thing that many times when you're aggressive in the morning, it will just come and retest you, kiss you goodbye, and then go. So in order to avoid that, I preferred the bigger stop, the safer stop, the right stop, and that's high the day. That makes it a 20-cent stop. So that means our R is double the size in this case. So we're gonna need to have more patience in the trade. So took it at 18 under 1834. My fill was 1832. Stop high the day, and we aim for target one at 18. I know one of you guys took it at 1805. I got 1807, by the way. And once we took half, then there's nothing more you need to do about it. Just manage the winners and let them run. I mean, you don't need to micromanage it. The stop was here. I let it pivot, and then we moved it here to 1830, which is just a coincidence. It's just a coincidence to be the break-even point, but I never put my stop because I want to be a break-even trader. That's not my goal. I want to make it a profitable trade and not a break-even trade. So sometimes they will come up here, retest, and then kiss you goodbye and then go. So we manage it. We move the stop to 1830, then we move to stop to 1820, and then we aim for the next target 1870. Okay, which is here. Why 1870? There's nothing here. Well, I'm going to show you. There is something in 1870. Going back to the daily chart. measuring this candle. What's the high? 1770. Sorry, I meant 1770, not 1870. So notice how the price comes back to this area. Okay, this area was a selling pressure zone, and now it becomes support, maybe temporary support, but that's where price is coming to, and the next target will be somewhere down here. Okay, but we took another piece at 1770. Now I'm going to go back to the 5-minute chart. There's no need to look at the 2-minute chart or 1-minute chart anymore. So now all you have to do is trail it by pivot. So stop reduce to 1820. Then on this rally, stop reduce to 1803. Okay, above this area. And that's where I have it. If it stops me out at 1803, I'm still almost 2 hours in the money there. And if it goes further, I'm going to have another 2 hours on the last piece, though, not on the whole position. But that's how I like to manage my trades. And remember, money management is the key. Some traders will just take, if you're, let's say you took a losing position first thing in the morning, and then here you just look at your P&L and it tells you, oh, if you're going to take it here, you're going to be break even for the day. So many people, and I did the same thing in the past. I'm going to be break even for the day and I'm going to start from scratch like nothing ever happened. So you do that, and then once you do that, guess what? It's going your way without you. And the pain is even bigger when price goes without you, because the stock paid, you just weren't there to take the profits, because one of the fears that we talked about here many times. So this is the HPE trade for this morning. Questions, well, you can email me anything. You know my email address, but if you want to just come up with any question here, I'll be more than happy to answer.